Welcome to the AML Gray Matters webinar series. This is a free series, so just so you know, this is we don't charge, we don't pay our guests, they don't pay us. We are really here simply to help the AML professional community with ongoing learning and addressing some of the nuances and complexities of AML compliance. And today we've got Scott uh, Blench. Is that how you pronounce it? Scott Blench?
Yeah, that's right.
Okay, fantastic. Sorry, I do apologize because my mouse is just constantly tweaking on me. So Scott, you're in the Cayman Islands, and we will be discussing a little bit of Cayman regulation requirements, but most of this does apply worldwide. So just bear with us if we talk a little bit about Cayman. But Scott, you're from the UK originally, is that correct? You're from the north part of the UK?
Yeah, I'm from Newcastle in the UK, so I've been in Cayman the last 3.5 years, and then before that, I was in the UK.
Yeah, and you've got a couple small kids, and you're loving it, from what I understand, correct?
Yeah, I am 99% of the time.
90% of the time, yeah. I've lived in the Caymans myself, so yeah, it's a wonderful, beautiful place as well, and for raising those children, I'm sure that they're safe.
To raise kids, yeah.
Yeah, and of course you're not in that UK cold right now.
Which is massive for this time of year, of course, because in December in Newcastle it's freezing.
Yeah. Well, you can see here I've got my coat on, so I'm in Arkansas in the States, so it is cold here. So Scott, again, he brings in over a decade of experience, and you'll see I've highlighted this first, second, and third lines of defense. I used to live in England, so I'm familiar with that terminology myself. However, a lot of people I understand are not familiar with that terminology. So I did put together a little slide here as well that explains the first line of defense. And Scott, what's your thought on this? Would you say that I'm pretty accurate with your understanding that the first line is, and I talk about the business being, it's like, the bank teller, for instance, they're a first line of defense.
The business units, who own and manage risks,
yeah. And so if you're like a corporate service provider, it's the people who are onboarding, are those who are client facing or customer facing. And the second line of defense is that compliance and risk oversight. And the third line of defense is that internal audit, which we'll be going into today. So we've got about 1 more minute to go. And oh, Tom, you're here. Yay. I was thinking I'm going to have to manage these polls. But Tom, I'll keep an eye if you do have to leave. But if you don't mind issuing the very first poll, Tom, and that is, the very first poll is, how frequently does your company perform an internal audit? And I don't think there's a right or wrong answer. Okay, but where it looks like most people are doing it annually and then, yeah, so it looks like annually. Is about 75% are saying annually, and then just under that 17% are saying every 2 to 3 years, and 1% every 4 to 5 years, and 9% unknown. They might be, or it might not be relevant to their business. Okay, thank you very much. So we'll say about 70% are doing it annually. So we can end that poll. And the next one is, who performs the internal audit at your organization? And do you outsource it to another company or a consulting firm? Do you have internal staff who perform it? Or you're not AML regulated, that's an option, or you don't know, which might be the case. So it is looking, I don't know, Scott, if you can see the results here. About 44% are saying they outsource it to a company or a consulting firm, and just over 50% are saying internal staff perform it. So about 50% saying internal staff. Okay, so I think that's going to be relevant. Both of those are going to be very relevant for our discussion, just to give Scott a little bit of insight into our audience. We had over 900 registered for today's webinar. I can always tell when we kind of hit a hot topic with our numbers of registrations. And it's the end of the year, so a lot of people are very, very busy with year-end workload. So we do have a large audience today. For those who are not familiar with our processes, so yeah, Tom, thank you. You can close that poll now. And I'll be giving a little bit of an intro here, some housekeeping, and then we'll let Scott kick off. So our housekeeping is, again, this is not legal advice. This is for training and informational purposes only. It's approximately 1 hour. We do have a tendency to go over about 5 to 10 minutes, but we do try and finish on the hour. For comments and questions, please use the question box. Unfortunately, the comments box doesn't work for these large webinars. The recording and slides will be made available. It usually takes us a couple of days. For those who are attending the live broadcast today, that will you will get a certificate of attendance. It will be automatically generated about an hour after the live broadcast. So look for it in your junk or spam folders because it comes from like the webinar platform GoTo. And we do have, Tom's been very good. I've only got a couple of the topics for 2026, but I think Tom's already filled up the first half of the webinars from January through June, it looks like, but I just didn't have the exact dates for some of the others because he's still working with those guests. But we have some very good topics, including published authors as well. So, and you know, some very good experienced compliance professionals. So with that, I am going to kick off, and Scott, I will manage the slides. If I move too fast, just let me know. But I think you wanted you wanted to kind of know the role. So one further poll, and that is, what is your role within your company? And Tom, if you can launch that one, then I'm going to turn off my camera as well. Scott, you're welcome to turn off your camera so that the screen will be available with just the slides. Okay, so we have, great. So obviously the majority is right off the bat, compliance function, about 70%. We have operations, about 12%, 13%, and governing body board of directors, about 12%. 2% regulators, and 6% are saying they're IT service providers or others. So at IT, it's very relevant for what we're going to be discussing today as well, too, Scott. When we were kind of planning the topic and the slides, you know, we both mentioned how important the IT systems are in the audit process.
Yeah,
Yeah,
definitely.
yeah. Okay, so great.
Well.
So does this help you understand our audience who's listening in today?
Thank you very much, Kimberly, and thanks for having on the webinar this morning. I'm really looking forward to it. So, yeah, before I go into the agenda, if you could just go on the agenda. Yeah. Yeah. So, yeah, it's really interesting to see there's a range of different attendees and roles and I suppose stakeholders that would be involved throughout the internal audit process. So if you work in the financial services sector, whether it's in first, second or third line, as a member of the governing body or a service provider, I hope there's something that you can take away from today's webinar. So to get started, we will be looking at what is internal audit. So the Institute of Internal Audit as definition, picking out some of the key components of that, and those will appear throughout the webinar. And then looking at independent anti-money laundering, countering the finance of terrorism or counter-terrorism financing wherever you are in the world, counter-proliferation financing and sanctions audit. So I will just refer to that as independent AML audit or AML audit throughout, so I don't need to read the full thing every time. And we will also be looking at the key independence requirements around internal audit and touching on some of those resourcing models of an internal audit function. So whether that would be in-house, outsourced or co-sourced. And then looking specifically at AML audit, we'll be looking at the international standards. So looking at FATF recommendation 18 on internal controls, which internal audit forms part of. And then, as Kimberly touched on, I'm based in Cayman, and I understand that a lot of the attendees are based in Cayman, so there'll be a CIMA focus with the regulatory requirement for AML audit in Cayman and the risk-based approach to determining the frequency of the AML audit. We'll also be covering the scope of an AML audit and common AML audit findings. So I think the common AML audit findings section is probably what most people will take something away from today's webinar. So we'll look at key themes, trends, and some examples of common findings in different areas and how to address those findings. And as well, in terms of addressing AML audit findings, it's like the approach that you should take or the process in terms of when you receive a report with AML audit findings, what an entity should do. And then to finish up, we'll be speaking about this throughout the webinar, but just how internal audit adds value beyond compliance. Thanks, Kimberly. So this slide has the, before going to the specifics on AML audit, this slide, so the Institute of Internal Audit has defined internal audit as an independent, objective assurance and advisory service designed to add value and improve an organization's operations. It helps an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of governance, risk management, and control processes. So we'll break down the key elements of that throughout, but I think independence and objectivity are key to that. So as an AML auditor, you must be unbiased, impartial, focus on the facts and not personal interests. And also, as I touched on in the agenda, internal audit is an advisory service that adds value as well beyond compliance. It's not just a tick the box regulatory. Yeah, so ACAMS provides a really simplistic definition of AML audit, which I like. It's an AML audit is a test to determine the adequacy of an organization's financial crime compliance program or a specific aspect of the program and whether the program's being followed as intended. So I like that simplistic way that they've defined that. So essentially an AML audit will assess the design and operating effectiveness of the AML compliance program, systems, controls, and training, and also assess the oversight of the AML function by the board of directors or the governing body. So in terms of the context of internal audit, what does independence mean? So the audit or the AML audit must be carried out by an independent person who's appropriately qualified to conduct an AML audit. So it shouldn't be carried out by a person who's involved in the creation or the day-to-day operations of the AML, CFT, CPF and sanctions program being reviewed. And internal audit should report to the governing body or the audit committee and not the management of the function being audited. So in terms of common findings around AML audit or internal audit, one of the most common ones is that it was not carried out by an independent person. So an example of that, or one of the most common one, is it's the AML compliance officer or the money laundering reporting officer conducting the AML audit. So there's obviously independence issues there. So it needs to be someone who's independent of the function being audited.
Okay. And you mentioned here, it says who is appropriately qualified. Are in Cayman, does somebody who is doing the internal audit, do they have to have a certain certification or years of experience?
In Cayman, it's not defined in terms of a specific criteria to determine whether they're qualified or not. It's just a judgment that obviously they would need to have sufficient experience, understand the subject matter to conduct an AML audit.
Okay. What about in the UK?
Again,
Not defined.
Yeah.
Okay.
If you could just go to the next slide, please.
Yeah. Sorry, there might be a little bit of delay as I click through. But...
Thank you. So this slide just sets out some of those different resource and models for internal audit. So you can either, the internal audit function can either be in-house, fully outsourced, or co-sourced, and there's pros and cons to each of those. So in terms of an in-house internal audit function, that's the traditional model where internal audit's carried out by employees of the company. But again, to go into the point around independence, they do have to be independent of the function that's being audited and have separate reporting lines. With regards to an outsourced internal audit function, it's exactly what it says on the tin, really. The internal audit function would be outsourced to an external firm. And then a co-source model would be a hybrid model where there's an external firm involved and they may work alongside the internal audit team to supplement the team or provide specialized like skill set if the internal team doesn't have that. So in terms of the pros and cons of each, for the if you can just go back, sorry, the in-house model. So the benefits of that really is the financial service provider or the entity retains full control, and the in-house internal audit staff understanding of the business operations. But in terms of some of the drawbacks or cons, there's sometimes limited flexibility for specialized skills and higher fixed costs for in-house internal audit functions. So you typically see larger firms, banks, have dedicated in-house internal audit functions, but smaller firms may not want that the higher fixed cost, particularly in Cayman where there's a lot of entities that don't necessarily have employees and they do outsource their AML compliance function and their operations to group entities or like third parties. So they wouldn't necessarily have an in-house internal audit function. They may, but it's more common that they would have an outsourced function. And
right. Just a quick question. Like we saw that some people were not some were doing annually, but some were doing, every 2 to 3 years. Would it be expected that you would do an internal audit annually, but then maybe outsource it every few years? And what are you seeing? What's kind of more common?
Yeah, so you can still do internal assessments of your AML compliance program. Like an AML compliance officer could do that, but that's not necessarily an independent audit. So you can still do those internal assessments to assess the adequacy and the effectiveness of the AML compliance program, but to satisfy the independence requirement, you would either have to have an internal in-house team that does that, or an outsourced or co-sourced team that would do that. And I'll touch more on the frequency in the later slides.
Okay.
And then I suppose just to finish up on the resource models and an outsourced internal audit function that can give you access to a broad range of expertise. It could be more cost effective, as I said, for smaller firms rather than building a dedicated specialized in-house team. In terms of some of the drawbacks of that, you obviously have less control of an outsourced function, but the governing body still retains the ultimate oversight and accountability of the outsourced internal audit function. And then with respect to the co-sourced internal audit function, that model combines the deep business knowledge or the operational knowledge of the internal teams with the specialized skills of an external provider, and that can help transfer knowledge from third-party providers or firms to the in-house internal audit function to help build their long-term capabilities and development. Okay, so now looking specifically at AML audit and the international standards. So the Financial Action Task Force Recommendation 18 around internal controls requires financial institutions and other obligated entities to implement a group-wide program of AML safety measures supported by strong internal controls. So at its core, among other things, recommendation 18 requires an independent audit function to regularly test and verify the effectiveness of the compliance program. And I suppose the overall purpose of this recommendation is to ensure regular, impartial reviews to ensure that the AML safety CPF systems are effective and weaknesses are quickly addressed. So we obviously only have an hour today, so we don't have time to go into all of the regulatory requirements in different jurisdictions, but I think most jurisdictions are committed to implementing these standards. But the AML audit is mandatory in certain jurisdictions, for example in Cayman, but in other jurisdictions it's not necessarily mandated, but it might be recommended. So rather than going to individual different jurisdictions, we'll cover the five recommendation
Right.
aid, which
And
suggests.
I do have one question from an audience member, saying, in Cayman, is it mandatory for a Cayman fund, whether regulated or unregulated, to undergo an independent AML CTF audit? And from what I'm seeing here, the answer to that would be yes. It's just not necessarily an annual, because they just refer to regularly test. They don't
Yeah.
say annually test. I mean, would you agree with that?
Yeah, so if you go on the next slide, that's probably a good segue into that. So
Okay. Well, before we do that, we got one next poll
yeah,
that's going
okay.
to, yeah.
I can answer that question. So if you're an entity conducting relevant financial business in the Cayman Islands, so as defined under the Proceeds of Crime Act, as per the AML regulations, you are required to have an independent, appropriate, effective, risk-based, independent audit function, and required to conduct regular independent AML audits. So if you fall under the relevant financial business criteria under the AMLRs, you are required to have an independent AML audit.
Okay. Thank you for responding to that one. So this poll question is, who is responsible for ensuring that a financial service provider is carrying out financial relevant business has an appropriate, effective, risk-based, independent audit function? Is it the AML compliance officer, or the MLRO, or is it the governing body board of directors? And right now, oh, you know what? I'm very pleased. Less than 10% are saying the AML compliance officer. Usually most people say that that's who it is. But yeah, looks like most people have it. 83% are saying it's the governing body, it's the board of directors, that
Yeah.
they're the ones who are responsible for ensuring it happens. So for those of you who are in that role, make sure that's on your agenda. And again,
Yeah.
yeah,
So the
go ahead.
the financial service provider's governing body of the board of directors is ultimately responsible for ensuring the entity complies with the AML regulations, including that obligation to have an appropriate, effective, risk-based, independent AML audit function. So yeah, the ultimate responsibility lies with the governing body, and they can it lies with them to ensure that they comply with the AMLRs.
Yeah, yeah. And it might be the AML compliance officer or MLRO who is, organizing it and kind of, steering it, but it's the board's responsibility to make sure it happens.
Sure, exactly.
Yeah, yeah, yeah. Okay, so next slide.
I can just still see the poll there.
Yeah. Oh, sorry, I gotta close the poll. Sorry, Tom might. Okay, yeah, it's closed. Thank you.
Thank you. Yeah, so with a focus on CIMA, so the Cayman Islands Monetary Authority, as I touched on just there, the anti-money laundering regulations require all financial service providers that carry out relevant financial business to have an appropriate, effective, risk-based, independent audit function. The guidance notes, so the AML guidance notes, elaborate on that and state that financial service providers should conduct regular independent AML audits. The frequency of the AML audit must be commensurate with the nature, size, and complexity of the entity, and consider the risks identified during the business risk assessment. So we can just go to the next slide, please.
Okay. Yeah, this is the nature, size, and complexity slide.
Yeah. So just to add to that, one of the most commonly asked questions that we get is how do you determine the frequency? What does nature, size, complexity actually mean to me, my business? And those days of a one-size-fits-all approach are gone, and you need to conduct an effective business risk assessment to identify and assess your risks, to fully understand what the frequency of your internal audit should be. So the first part of this would be to obviously conduct and document our business risk assessment to identify money laundering, terrorist finance, and proliferation financing risks in relation to your customers, countries, products, service, transactions, and delivery channels. I'll touch on this a bit more in the common findings, but it's worth mentioning twice that proliferation finance and risk has to be identified and assessed as part of the business risk assessment. We often see entities just assess the money laundering and terrorist finance and risk, but the AMLR's the 2025 revision clearly state that proliferation finance and risk has to be identified and assessed as well. So in terms of common findings and recent findings, that's what we often see, that entities don't adequately identify and assess those proliferation finance and risks, or they don't even document them at all. So to determine the frequency of the AML audit, you obviously need a person who has to do the business risk assessment, you need a person who has a strong understanding of the entity to understand the risks, and also a person, this can be the same person, it doesn't have to be two people, but someone who understands how to conduct an effective business risk assessment. So to conduct a business risk assessment, you need someone who understands your entity and the risks that you're facing, and you also need someone who understands the mandatory and the key components of conducting a business risk assessment. So once that's determined, that will really drive the frequency of the AML audit, and that must be defined in the event of any changes to your overall risk profile. The frequency of the audit should be reconsidered and documented. So the frequency isn't mandated by CIMA. There's not an annual requirement, every 2-year requirement. It's risk-based, and it should follow the risks that it should be determined, by the risks that you identify in your business risk assessment. And that's a question we often get in terms of how do we identify that.
Okay.
So on this slide here, we're just looking at the similarities between an on-site inspection and an AML audit. So an on-site inspection, a regulatory inspection from the authority, whether it be CIMA and Cayman or different regulator or authority in other jurisdictions, will assess your AML, CFT, CPF, and sanctions internal control systems, policies, procedures, and test the operating effectiveness of those controls. CIMA will also assess whether if you conduct relevant financial business, if you have an independent audit function that tests the overall integrity and effectiveness of the AML, CFT systems and controls. So if you are subject to an inspection, you conduct relevant financial business, there's no evidence that you've done an independent AML audit, that would be a breach of the regulations in CIMA, and that would be a finding in the report. And in terms of the similarities between an AML audit and an AML on-site inspection, so an AML audit will also assess the design and operating effectiveness of your AML safety framework. So it'll follow a very similar approach to what a regulator does to assess the design and operating effectiveness of that. So by being proactive and doing an AML audit, you will obviously reduce the finding of not doing an AML audit and breaching the AML regulations, but it's also a proactive opportunity to identify any gaps or weaknesses or deficiencies in your controls before you have an on-site inspection. So you can address those and remediate those prior to having an on-site inspection. So it should be form part of your controls, and the AML internal audit should be determined by the frequency. The frequency should be determined by the risk in your business risk assessment, but you before you subject to an on-site inspection, if you haven't done any AML audit in the past, that would be a breach of the AML regulations.
Okay. And has one of the questions coming in from the audience is saying, has there been any experience with SEMA or any regulator that you're aware of actually rejecting an outsourced audit due to lack of independence or lack of qualifications? Or do you have any scenarios where even if it's outsourced, the independence might be questioned or
Yeah.
qualifications might be questioned?
So if you go on to the next slide, that will answer one part of that, and then I can answer the second part.
Okay, sorry again, just bear with me as
Mhm.
so I try and navigate to the next slide. Hold on. I'm having more tech problems today with my mouse. I do apologize. There we go. Okay. Scope of an AML audit.
So this is what the AML guidance notes define as the scope of an AML audit. So if your outsourced service provider or even in-house has done an AML audit but doesn't hit all of these points in terms of testing overall integrity and effectiveness, I'll not read all of those out. SEMA might say that the internal audit wasn't sufficient in terms of hitting all of those points that is required. In terms of independence, if an outsourced or a third party is independent of the function being outsourced, there should be no issues with independence. We have seen examples in the past where, say, for example, an entity has outsourced its AML compliance function to a third party. So, for example, the AML compliance officer, the MLRO, and DMLRO, and they've used the third party's AML manual or the policies and procedures, and they placed reliance on the third party's internal audit of the third party, and that wasn't specific to the entity that was being audited or inspected. So that would be the internal audit that was relied upon there wouldn't be suitable, because it was more an internal audit of the third party than the actual entity itself. Hope that answers
Okay.
the question.
Yeah, so if I could just kind of clarify that. So it was it was an assessment, really, not necessarily an audit of just the AML manual is in MLRO processes. Is that what you were saying
Yeah,
there?
yeah. So say for example, a securities registered person in Cayman, so investment manager, investment advisor, they don't have any staff in Cayman, and they outsource their AML compliance officer, the MLRO and DMLRO, to a third party, and
Mm-hmm.
they have used the third party's AML policies and procedures, and relied on the third party to operate the compliance function. So when they were asked to provide their internal audit report, they didn't have an internal audit that was specific to the entity, but the third
Okay.
party that they played reliance on, they'd had an internal audit of their AML manual, their systems and controls, which was specific to the third party. So that wouldn't be a sufficient independent AML audit for the entity that was being inspected, because they've
Okay.
reliance on a third party's internal audit process, internal audit report.
Yeah. So even if you are outsourcing your AML officers and compliance obligations to a third party, the entity who is outsourcing still must have their own AML policies and procedures and an audit on that entity, not the vendor who they've outsourced it to.
Yeah, so they can use the third party's policies and procedures as their own, but
Mhm.
to satisfy the requirement in the AMLRs, the independent audit has to be specifically for the entity, not the third party. So there's other elements to an AML audit outside of, does the policies and procedures comply with the applicable laws and regulations? You also look at the oversight of the compliance function from the governing body of the regulated entity, so the registered person here. So what I'm saying is that if you conduct relevant financial business in Cayman Islands, you are expected to have AML internal audit of your specific entity and not place reliance on an internal audit that was conducted for your third party outsourced service provider.
Okay. Shall I go to the next slide?
Yeah, so this slide here, I'm not going to read through it, but this is an extract from the Siemens AML guidance notes, and it just sets out the scope, the minimum scope of what should be covered in terms of a independent AML audit. So yeah, you can go to the next slide, please.
Quick question, actually. You have the one assessing employees' knowledge of the laws, regulations, rules, guidance, and policies and procedures. I mean, if I was the, AML staff member, and maybe not the MLRO, maybe not the actual compliance officer, I mean, does the audit include, if it's part of the scope, does that include like interviewing different employees? What about interviewing board members? Kind of just making sure that I mean, I almost could see it um, like a test kind of thing. I mean, is that the process that is undertaken?
Yeah, so there's multiple ways that can be done. Obviously, you can be assessed through training. So, is the training adequate? First of all,
Mm,
does it does the training give the employees that knowledge of the laws, regulations, rules, statements of guidance, and the internal policies and procedures? You would assess the results of that training, the training logs, the timeliness of the training. You would also conduct interviews with key stakeholders, and that would change per audit, per entity. So you would typically interview a member of the board of directors or the governing body, the AML compliance officer, money laundering reporting officer, deputy money laundering reporting officer, operations staff, key frontline staff, just to get an understanding and assess whether those employees are aware of those laws, regulations, and they're applying them in practice.
okay, great. And I have actually, kind of helped some of our customers with Silo that, whenever they're going through audits or even inspections, like testing of the screening systems, because they'll give like, some names that they say test this name and they want to see how many hits, they want to see, if it gets a match, things like that. So I've seen things like just testing of systems as well,
Yeah.
which I think you'll speak about later. Okay. And common AML audit findings slide, you should see
Yeah.
that now. Yeah.
Yeah, I can see that now. Thanks. So yeah, so this the next few slides are just going to cover some key themes and trends that we've identified during AML audits. I suppose the first section around independent AML audit. These are common findings really in relation from regulatory inspections rather than identified by internal audit on internal audit, like during an internal audit. So common findings around independent AML audit is that obviously the obvious one is just that there was no evidence that an AML audit was conducted, that he's conducting relevant financial business, but there's no evidence of any previous AML audits. Touched on the independence one earlier, so we see like often see examples where it was conducted by the compliance function, even a member of the board of directors conducted the AML audit, so there's independence issues with that. I kind of touched on this one before as well when that question came up around that the AML audit wasn't specific to the financial service provider, and it was they placed reliance on an internal audit report for their external third party provider. So if you're conducting relevant financial business, you should have an independent AML audit that is specific to the financial service provider and the financial service provider's governance of the compliance function and the design and effectiveness of that. And then another common one is where entities have failed to address previous AML audit findings. So maybe they do regular AML audits to ensure compliance with the AMLRs, but they haven't done anything with the findings and recommendations raised in previous AML audits, and there's been a repeat of those issues that haven't been addressed. And just before we move to sanctions compliance, so in May this year, CIMA issued a supervisory information circular that summarised some of the key findings from on-site inspections of registered persons from January 2022 to March 2024. So your registered persons are your investment managers, investment advisors, broker-dealers, security arrangers, market makers. So it's not the full financial services industry. This was focused on registered persons, but surprisingly, CIMA identified that 63% of registered persons had weaknesses or deficiencies in their independent audit function, and that was actually a 16% increase from 47% in the previous inspection period from October 2020 to December 2021. So it just shows that CIMA does have a focus on it. It is a requirement, and if you're not doing an AML audit or the AML audit isn't sufficient, that would be a breach of the regulations.
Okay. Do you think that 60% increase is due to their kind of clarifying the independence functionality, or is that an increase due to just the number of registered persons having also increased, or
I'm not sure, to be honest. That granular level of breakdown isn't really provided, but they do provide some examples of those deficiencies, but not necessarily the percentage of those.
okay.
It's just that there was a 16% increase from the previous period. The previous period was a shorter window, but yeah, in terms of the exact reasons why, I wouldn't be able to say.
Okay, and that circular was May 2025 by
May
CIMA, is that correct?
25, yeah, so that's on CIMA's website. It's probably a good thing to read for the attendees.
Yeah. So if you're in that line of work, yeah, please do read that. Okay.
Okay, thank you. And then just moving on to sanctions compliance, some common issues that we see is that there's inadequate evidence of sanctions screening on the customers and the identified related parties, or examples where they've just screened the customer's name, but they haven't screened the beneficial owners and controllers. Another common finding we see is that there's like one-time screening done. It's done at onboarding, but there's no evidence of ongoing screening against all of the applicable sanctions lists. And then another common one around sanctions compliance is that there's evidence that screening's taken place, but there's incomplete evidence that the entities actually reviewed potential screening matches. They haven't added discount and rationales to the actual hits. So they've run the screening checks and printed the case reports, but there's no evidence that anything was actually done to discount the potential matches.
Okay. And I have a quick question for so I've seen that too, where people were just screening at onboarding. They weren't doing the daily or nightly screening of exactly as you mentioned, all the identified related parties. And is this more because, and of course, I've been in compliance 20 plus years now, and with technology now able to automate and do a lot of that, I think, 20 years ago, we probably just re-screened them, during periodic reviews. But are you seeing that that's no longer acceptable? It must be almost daily, and that your portfolio and the related parties are screened.
I would say best practice would be daily. In terms of CIMA, it just states ongoing screening. It doesn't specifically specify that it has to be daily. Obviously, sanctions lists change quite frequently. So the key thing is ensuring that it's screened against updated sanctions lists. So if you wait between like a periodic review, for example, of maybe 1 to 2 years, the sanctions
Yeah.
lists change quite significantly in between that period. So although it doesn't specify daily is required, it would be a best practice approach that I would suggest.
Yeah, especially since 2022, because they are changing frequently.
Yeah.
I agree. Okay.
Okay. Next slide, please.
Okay, risk-based approach of common AML findings.
Yes, that's the one. Yeah, so I touched on this slightly earlier in terms of the business risk assessment, not identifying and assessing proliferation, finance, and risk. It's worth repeating because it is a very common finding, especially we've identified across several audits we've done this year that entities aren't identifying and assessing that proliferation, finance, and risk. So next time it comes to updating your business risk assessment, which you should be doing frequently anyway, check, are you identifying, assessing proliferation, finance, and risk? If not, you need to be doing that and documenting that within your business risk assessment. Also, we see quite common that the business risk assessment doesn't consider all mandatory risk factors, so your customer, country, geographic, product, service, transactions, and delivery channels. So again, when it comes to reviewing your business risk assessment, ensuring that you've identified and assessed the money laundering, terrorist finance, and proliferation financing risks across all of those risk factors. With respect to customer risk assessments, we see examples where there's just no documented customer risk assessment. There's like a blanket approach, or there's like low risk because they are a regulated entity, or not even any, I suppose, rationale or documentation as to why they're a certain risk classification. So we see that customer risk assessments are not always performed, or they're not necessarily reviewed and kept up to date as part of ongoing monitoring measures. So you might have a customer risk assessment that was conducted at onboarding, but 5-6 years later, there's no evidence that's been updated and kept up to date. And then lastly, with the risk-based approach, this is common across both the business risk assessment and customer risk assessment. Entities fail to have adequate business risk assessment and customer risk assessment procedures, so they don't document the methodology that clearly explains how all of the risk factors are scored and weighted before determining the overall business or customer risk rating. So they might say that the overall business risk is low, but they haven't explained how they got to that conclusion.
Okay. Yeah, and during our pre-call, and I don't know if you're going to be talking about this later, but we were talking about how, like, if you have a regulated or listed on a stock exchange, usually you can apply simplified due diligence, but you're saying you still need to have an understanding of that business, because even though it's listed or regulated, it might still have some risk factors.
Yeah, exactly. So I think that's in a couple of slides' time.
Okay.
So elaborate on that then, but that's a good point, and it is definitely a common issue that we observe.
Okay.
So
This is the
yeah,
CDD and ongoing monitoring measures and PEP risk management slide.
yeah. This is a really common one again, that we see entities failing to identify and verify beneficial owners and controllers at onboarding and as part of ongoing monitoring measures, and particularly in high risk scenarios or for high risk customers, failing to apply adequate enhanced due diligence measures, which links in with the one below around PEP risk management. So Regulation 30 requires additional due diligence measures to be undertaken on PEP individuals, such as obtaining senior management approval of the PEP relationship and establishing source of funds and source of wealth. So we often see that an entity might have PEP risk exposure, but the overall customer risk, when they've considered everything, they've classified the customer as medium risk, but they failed to do the additional due diligence measures on the PEP because they've classified the overall risk as medium. So regardless of the overall customer risk, when everything's been considered, identified and assessed, if you've identified a PEP individual, Regulation 30 still requires you to complete those additional due diligence measures on the PEP individual. So that's a common one. We even see it when the overall client's rated high risk, they haven't done the adequate additional due diligence measures, but particularly where they've maybe assessed an overall medium or low level of risk, but they haven't done additional measures on the PEP.
On the PEP. And just to kind of clarify, because I get asked this a lot, it's when you have a corporate entity or a trust, for instance, as a client that you're providing services to, and there is maybe a single PEP as a director or a single PEP as a shareholder or beneficial owner. So that individual is indeed high risk, and you must do is get the source of funds and make them high risk, but it doesn't necessarily mean, and tell me if you disagree, but in my view, it doesn't mean that the actual corporate entity or partnership or fund or anything like that has to also be high risk, unless, this is what I say, that PEP has significant control. Like if they're a sole director and shareholder, but if they're just one director of several or one shareholder of several, then, I say you can still make the entity or the trust or the partnership, that can still be possibly medium risk. Would you agree with that?
Yeah, so I would take it on a case by case basis, and obviously you would identify the PEP risk. Do they have a prominent function? Understanding the real risk of that PEP, regardless of the however many members of the board that there are, and then you would review that in conjunction with the overall customer risk assessment, so considering all of those other risk factors,
Okay.
country,
Yep.
geographic, and then make that holistic decision that should really align with your customer risk assessment procedures. So it would be case by case, but there are examples where there's a PEP controller and the overall customer risk assessment has the other risk factors has identified a lower level of risk. So it might not necessarily be an automatic high risk for the PEP individual. It all
Yeah.
depends on the specific circumstances of the PEP and the overall customer.
Yeah, and I've seen that where suddenly a PEP is like placed on the board, but yet that PEP has absolutely no you know connection to that particular industry that that company's supposedly involved in. So that could be bribery or corruption, a way to pay them for their board membership kind of thing. So yeah, I do have to kind of look at whether or not that particular PEP has that industry knowledge and good reason for them to be on the board.
Yeah.
Is what I'm usually looking for when I'm looking at PEP board members. Yeah. Okay.
Thank you.
Yep. Now simplified due diligence. Yeah.
Yeah. So just going back to your point before, yeah. So we see quite a few examples. Just firstly, where they've applied SDD, they've said that the client's low risk, but they haven't documented that rationale for applying simplified due diligence measures. But to your point before, so it's regulation 22, I believe, the acceptable applicants criteria, which sets out those applicants that you may apply simplified due diligence measures on. But regulation 21.1 before that clearly states that you can only apply simplified due diligence when you've identified and assessed a low level of risk in accordance with regulation 8. So falling under that acceptable applicant criteria, where you might be a regulated entity or a subsidiary of a regulated entity, isn't an automatic you can apply simplified due diligence. You first need to conduct that risk assessment. Have you identified a low level of risk in accordance with regulation 8? So that's your risk-based approach that we touched on earlier. And if you have, and they're an acceptable applicant, you can apply simplified due diligence measures. If there are other high risk factors and overall the overall risk of the customer is high, you shouldn't be applying simplified due diligence measures on the basis of regulation 22 alone.
Okay.
Okay, and another common finding that we identify in the AML audits is around the oversight of the AML compliance function. So the board of directors, the governing body, have not evidence that they've approved AML policies and procedures, and there's no evidence that they've actually reviewed and approved the AML business risk assessment. Another common one is around the board meeting minutes or equivalent don't like demonstrate that any AML matters have been discussed, or any approvals, or any escalations, or AML compliance officer reports to the board. So if it's not documented, it hasn't really happened in the eyes of an internal auditor or of a regulator when they're looking for that evidence of the oversight of the compliance function. And just lastly on that, we see a lot of clients obviously outsource their AML compliance function, which is fine, but there's a lack of oversight from the governing body of that AML compliance function. So they're ultimately still responsible for the AML compliance function, and they should conduct like ongoing risk assessments and due diligence on the AML compliance function to ensure that they're operating properly.
Okay. I have a quick question. I'm sorry, I might be being a little cheeky here with this question, but if you've got a entity a regulated entity that has outsourced their AML compliance function, like almost fully, for instance, and
Yeah.
that outsourced provider is, doing the onboarding, doing the risk assessments. When it comes to if they determine somebody's high risk, do they still need to get somebody within the organization, within the regulated company to sign off, or can they have somebody within their organization sign off? In other words, does somebody within the regulated entity have to be the high risk approver?
Yeah, it would be somebody within the regulated entity, and I suppose the AML compliance officer, money laundering reporting officers considered management, senior management. I think it would be best
Okay.
practice to run anything by a member of the governing body, obviously depending on the size, nature, complexity of the entity. But it would need to be someone who's like directly involved. So it couldn't be senior management of the third party who's not really involved with the regulated entity. So it would
Okay.
need to
But
be.
if they outsource the MLRO function as well, could the outsourced MLRO still sign off?
They can, yeah.
They can. Okay. I just wasn't sure. Yeah, because as you mentioned before, sometimes they have no staff. It's just like a. Okay, great. Thank you.
And
And this
then
transaction monitoring. Yeah.
yeah, so common findings around transaction monitoring we see is really just outdated and inadequate transaction monitoring rules for detecting suspicious activity. And the second one is really around the customer due diligence and like understanding the customer process. So by failing to, at the outset or as part of ongoing monitoring, establish the expected account activity or the nature of business of the customer, the entity's unable to like effectively ensure transactions are consistent with the knowledge and assessment of the customer by failing to really do that or document that at the outset or as part of ongoing monitoring measures. So they're unable to really understand what is suspicious or abnormal for that customer, because it should be on a customer basis. Like what's normal for one customer might be completely different for another. So it should consider the information that you've obtained during the customer due diligence process. And lastly, we often see where like transaction monitoring alerts, they're just not investigated or documented. And like there's no evidence of like of the investigation or like what's happened to determine whether something was suspicious or not in terms of any transaction monitoring alerts.
Okay. Is it just that somebody just kind of went in and said, yeah, cleared it, but they didn't
Yeah,
actually document why
exactly.
they cleared it? Okay.
Exactly. And there was no further investigation. And yeah, they've just cleared it without documenting the rationale behind that.
Okay.
Okay. And then with respect to AML training, obvious one is just that AML training hasn't taken place, so it was incomplete for everyone or certain members of the board or employees. And then quite a common one that we often see is that, so under the AML guidance notes, the board of directors, the governing body, the AML compliance officer, MLRO, and the MLRO are required to have like a high level advanced Cayman specific training. We often see examples where just everyone in the firm, including employees, have received the same level of training, and there's no evidence that those roles have received that higher level of training. And then this is probably one of the most common ones that we see in terms of we see a lot of entities that are obviously registered in Cayman, but they might not have any staff here, and they outsource operations to like a group entity based in another jurisdiction. So basically, everyone's based in another jurisdiction, but they're registered in Cayman, and the evidence that the AML training that's been delivered is more specific to the other jurisdictions, so the other regulations referencing other regulators and not Cayman specific. So that's fine. Obviously, they should do that training as well, but they also need to demonstrate that they're doing the Cayman specific training and not just training that's focused on other different jurisdictions.
Right. And are you seeing a trend where training has to be like comprehension testing or just signed off that we did training, everybody signed off, or do you have to have some kind of like quiz or comprehension evidence?
I mean, in terms of best practice, there should be some element of demonstrating that you've understood and applied the training and passed some sort of threshold. But yeah, there's not like a defined criteria in terms of whether the training that's being delivered is adequate or not.
Okay, thank you.
In terms of assessment. Okay. And then the last slide on the common AML audit findings, we see examples where entities fail to file a suspicious activity report in a timely manner, or they haven't failed one at all. Inadequate record keeping and documented evidence of suspicious activity reporting decisions. So they might have a SAR log and they might just say that something wasn't raised, but they haven't, again, rationale and the support and evidence as to why something wasn't raised. And then we've also seen examples where entities have just failed to maintain a SAR log, and during the audit we've identified through interviews or speaking that they have identified some suspicious activity in the past, but determined that something's been raised to the MLR in the past, but they haven't raised it because they deemed it non-suspicious, but none of that was actually documented in a SAR log.
Yeah, so because the SAR log should be both your internal SARs that were sent to the MLRO, even if the MLRO did not file an external SAR.
Yeah.
So both the internal and the external, and of course why they made that decision. Yeah, that's one thing I've always kind of said. The true what makes compliance so difficult is we have to document our judgment calls. For the future. It's so that's, and that can be very time consuming at times, and that's especially with relating to SARs. Okay. So I realize we're top of the hour now, so but we've got a few more slides. So and a lot of really good questions. I don't know. Do you have an extra 10 minutes, Scott, to kind of hang on and answer some questions?
I do, and the following slides I can go through pretty quickly, and I know that you're going to distribute these after. So I've added like an appendix with some useful documents that people can refer to that I don't necessarily need to explain in detail, but particularly with this slide, I'd like to just so this is after you've at the stage where you've received an AML audit report with some findings, might be some of those examples that we've just covered there. This kind of just sets out the approach that you should take in terms of addressing any AML finding in an internal audit report. So the first stage is you should do that root cause analysis. The entity must first understand why the issue occurred. Was it due to inadequate controls, lack of training, or oversight? So keep asking that question why to understand the root cause as to why that happened. Is it something systematic? Was it just an oversight? But just understand that root cause. And once you've done that, it's to develop a corrective action plan. So developing specific measurable actions to ensure that you address the deficiency, whether that's revising any policies and procedures, enhancing monitoring, or even like introducing new technology to help you be more efficient and effective. And then any actions, you need to assign an action owner, so assign responsibility and designate an accountable person or team to implement those corrective measures to ensure that they're followed through. And then as part of monitoring and reporting, the entity should be tracking progress and reporting outcomes of that progress to management, to the internal auditor, or even in cases where significant deficiencies were identified, to the regulator to demonstrate that you're following up on those. And then lastly, in terms of continuous improvement, it goes back to a point I made earlier, is using those findings as lessons learned to strengthen the internal controls and prevent reoccurrence. So when you get AML audit findings, it's learning from those and ensuring that they don't happen again, because internal audit really should be following up on those findings to ensure that they have been addressed adequately.
Yeah, and that root cause analysis, in my view, is actually really important.
Yeah.
Why did this happen? It's not a blame thing.
No.
It's again, right? Is it a training issue? Is it a client expectations? Like, did we not get updated passports because our clients refused because they think they've already complied? That kind of stuff. So yeah, it's a. I think that's kind of overlooked, that root cause analysis. They just kind of like, oh, let's remediate this, get that new passport and or whatever, and now it's corrected. It's like, well, why didn't we have it in the first place? So that is very, very key, I think. Yeah, thank you for that. And there's a lot to this, more to just getting the audit, checking off your box that you did it, and putting that audit report in a drawer, and until next time, there is a project management flow that the board needs to follow up with.
Yeah, absolutely.
Mhm. Okay.
Yeah, and then I suppose this is the last slide, and then we can go into some questions. I'll quickly talk through the appendix documents just so you understand what's in those. But this is really just to, it's important to remember that AML audit's not just a compliance tick the box exercise. Internal audit's an advisory service that adds value beyond compliance. It brings transparency, so the AML auditor can highlight gaps that management might not see on a day-to-day basis. It strengthens your internal control systems. It supports smarter decision making, so it allows the leadership to understand where weaknesses exist, where there's opportunities for efficiencies or cost savings. An example of this is I've seen an entity that pretty much applied enhanced due diligence on most clients. They had a lot of clients that maybe could have been assessed as a low level of risk. They spent a lot of time on periodic reviews and obviously at onboarding, collecting several documents that they don't necessarily have to do to comply. So we observed that, let management and the board know that there's areas for efficiencies and cost savings by applying a risk-based approach, which the entity should be doing anyway, and reducing that burden on the compliance staff, which also obviously reduces time spent and cost. And then AML audit also, it builds trust and accountability. So as we touched on the previous slide, those clear recommendations, agreed corrective action plans, internal audit will follow up to ensure those improvements actually happen and the entities doing what they said they would do in the corrective action plan. And finally, it just drives continuous improvement. So as we touched on, AML audit isn't just about finding faults, it's about being proactive and identifying weaknesses and helping entities like really move forward and drive that continuous improvement.
Okay. And our appendix. So you've
Yeah,
provided
the
some
appendix
information.
document. So I've just included a typical non-exhaustive document and information request list that you might get at the start of an AML audit. So if you haven't done one yet, so if you look at this, look at these, and if you don't have these are the types of documents that the internal auditor or even a regulator would assess as part of an AML audit. So check these, check if you have them. If you don't, make sure you do. If you do, make sure that they're adequate and they fit the requirements as per whatever jurisdiction you're in.
Great. Yeah, I'm looking at this right now, and yeah, this is brilliant. This is a great takeaway. Worth the hour and 8 minutes so far. And the only thing I would probably add, if it's not in there, is like who is approved for larger organizations, who's approved to sign off on high risk clients, and
Yeah,
maybe that's part of the authorized signatories list uh, thing, so you just make sure that that's you know who can sign off to. Yeah, you gave a great takeaway there, and I really like this stages to flow.
yeah, yeah. So this just gives you an idea of the stages of an AML audit. So planning, field work, reporting, and follow up. So we kind of talked about each of those key steps throughout the audit. I think um, in terms of field work. So once you've had the kickoff meeting through the planning stage and you've provided the documents and information requests, the kind of stages that you can expect um, to be part of an AML audit would be providing a walkthrough of your processes, systems, and controls to the AML auditor. The AML auditor will review key documentation, AML policies and procedures, and your systems and controls. They'll have those interviews that I mentioned earlier, and through sample testing, so a sample of customer files, transactions, training, evidence of board oversight, assess the operating effectiveness of the overall AML compliance program. And then what I touched on in the previous slide there around reporting and follow up. It just gives you a little breakdown of the different key timelines and milestones, I suppose, in a AML audit.
Okay. And then somebody was asking about what's an FRA register. I didn't spot that. Somebody is asking what's an FRA register.
The Financial Reporting Authority Register. So that's quite Cayman specific.
Oh, okay. So okay. All right. And our key takeaways.
Yeah, so AML audit, it's mandatory in Cayman for financial service providers carrying out financial business, relevant financial business. The frequency of the AML audit should be risk-based and determined by your overall business risk assessment, which we've touched on. The governing body is ultimately responsible for ensuring financial service providers conduct an AML audit and have an effective risk-based internal audit function. And lastly, as we just touched on there, it's not just a tick the box compliance exercise, the AML audit, it adds value beyond compliance.
Great. Thank you. All right. So thank you very much, Scott. I appreciate um, your presentation today. I'm going to go over to questions. For those who do need to jump off, yes, we will be sending the slides. We will be sending the recording out. It's also always on the silocompliance.com website, there is a AML Gray Matters tab, and we do have all of our old recordings, and you can go to each recording and get the slides as well. So if any of you are trying to, track down slides and agendas so that you can show your training throughout the past year, please, you can go to our website there and find them there, as well as sign up for the new stuff. Okay, so if we've got a couple more minutes. If you do have to jump, I want to say thank you very much. Merry Christmas and happy holidays to everybody. I'll stay on, and Scott, if you've got, again, 5 more minutes, I'll see if I can get some of these questions answered. If anybody wants to reach out to Scott, here is his email at Grant Thornton, And, again, I just wanted to also let everybody know that, what we do does matter. We are protecting somebody who is vulnerable, even if you never meet their name, or, never meet them or never know who they are. So please understand that the work that you do truly does matter. And these internal audits, they're here to help strengthen our businesses and our compliance programs. They're not about blame or you know accusations or anything, finding fault. It's about making us all stronger, and by when we're all stronger, then we're protecting that financial system and creating a much better world for our children and grandchildren, um, as well. So, and making a fairer world. So I just wanted to make sure, end of the year, everybody understands, you are appreciated. Sometimes it feels like we're not, with the heavy overload of work. So please, end this year knowing that your work does matter and you do matter. All right, so we will kick off with some um, great questions, because these were such very practical questions. And there's so many. I'm trying to find out. If I can find one. Okay, what one person was asking, does the board have to, or the governing body, do they have to sign off on the actual procedures? So not just policies, but procedures, since procedures can be quite, I don't want to say low level, but very operational. Does the board need to sign off on procedures, or just kind of policies and more of the high level stuff?
Yeah,
Which,
so key AML policies and procedures, the board should have awareness and sign off on them. Obviously, the procedures are going to help you execute that policy, but I think typically the board should approve those high level policies and procedures. It might be quite granular underneath that, but the key AML policies and procedures should be approved by the board.
okay, yeah. See, what I do is I do what's called a almost like it's a data entry workflow, step by step by step. This is how you put the data in, or you run this for something like that. So, but I wouldn't think that they would have to prove that, obviously, because that's more about the system than, the policies and
Yeah,
procedures.
yeah.
Yeah.
So that can be delegated, but they need to ensure that there's comfort that the procedures align with the approved policy and the law.
Mhm.
Yeah.
Yeah. Um, okay, so some of these I'm just going to read because I can't get through all of it. If a smaller company is proactively subjecting themselves to a full external audit annually on a risk-based approach, how in-depth would the regulator expect the internal audit function to be? Oh, and something I don't think we mentioned, you said that internal audit, external audit reports or independent audit reports need to be submitted to SEMA. Is that correct?
Yeah, so there's an expectation, and SEMA often request that entities around January time actually provide their internal audit plan, but also to provide any evidence of internal audit reports to SEMA.
Okay, so they have to file the internal audit plan, and if they have a audit report to file that, but it's not, again,
This
it's not necessarily has to be
uh,
done
yeah, it's not
annually.
prescriptive, and um, SEMA ask entities to provide their internal audit plan. So that might be through like sending a letter to the CEO or the board to ask for the approved internal audit plan.
Mhm.
It's not necessarily documented somewhere that that has to happen by a certain date, but the expectation is certainly that if you have conducted an AML audit, the report is shared with SEMA.
Yeah, and if there were findings, even breach findings, that's not going to be held against you, would it? Or would you want to kind of say, here's the audit and here's our remediation report as well, that we remediated all that? Is that something you would, yeah,
Yeah,
is SEMA really
it,
going through these?
in the internal controls rule, there's an expectation that any significant deficiencies are shared or reported with SEMA.
Mhm,
And that would be any deficiencies identified by internal audit, including internal
mhm,
audit. Um,
mhm.
I suppose the key thing is any deficiencies that have been identified, have you went through that process of the root cause analysis, corrective action plan, ensuring that there's an action owners and plan in place to address those. So that's the kind of the thing that CIMA would be expecting the regulated entity to have in place to address those deficiencies and report on them.
Okay. And so this question from Brittany, she's saying, if a smaller company, and it's really not about the size of the company, it's about the risk, the business risk analysis um, of that company. So a small company who has a lot of low risk clients, low risk transactions, yeah, they don't necessarily have to do it every year, an expensive external audit, but a small company that does have very high risk clients, they, and high risk transactions, they probably would. Is that how you would advise her?
Yeah, so again, it's difficult to say without understanding the full business risk and the
Mhm.
profile of the business. As you said, size is just one component of the size, nature, complexity. You've got to understand, is the entity dealing with high risk products in high risk jurisdictions? Is the overall risk going to be higher regardless of the size of the entity? So all of those combined should give you a holistic view of how frequent your AML audit should be. I hope that
Okay.
helped.
Another question's come in, and she's asking, as part of an SAQ request by CIMA, and I'm sorry, I do not know that acronym. SAQ, what is that? Are you familiar with that? Is it
I'm
like a
not, no.
questionnaire? Oh, okay, sorry. She says we would expect to provide them with an internal audit report at that time rather than with our IA plan. I think that's probably some kind of sorry, IA plan. I think that would
Internal,
be a
internal plan, yeah.
oh, internal audit plan. Okay.
Yeah.
So she goes, yeah, we would provide them with our internal audit report rather than our internal audit plan.
Yeah,
Um,
so with regard to the point on the internal audit plan, this is just something we see CIMA writing out to entities around January time. Over the last couple of years, they've done so. I don't know if they do this with every regulated entity in the different sectors, but we have a lot of clients come to us and say CIMA's asked us to submit our internal audit plan for 2025 or 2026.
okay.
So it's something CIMA do write out to request, but it's not necessarily documented in a rule or a statement of guidance.
Okay, great. Um, this can or is it more? Okay, does Cayman specific training mean that the regulations, laws, and requirements should be covered, or is it more specific areas? I would think discussing the, like you mentioned, for instance, like Regulation 22 of the AMLROs. You would kind of you don't necessarily need to have everybody know that it's Regulation 22, but because of Regulation 22, we have to do X, Y, Z. Is that how you would explain that
Yeah,
with
it,
when they talk
it,
about
it,
Cayman specific training?
exactly, and it would need to cover like the applicable acts regulations, so Proceeds of Crime Act, terrorist finance, and the AML regulations. So it's not necessarily it has to list out every single reference or rule
Mhm.
in the regulations, but the AML training should be designed around compliance with the applicable acts, laws, acts, and regulations in Cayman.
Mhm. Okay. Yes, I'm getting a lot of people saying thank you. One person said this was a great way to what to expect when you're expecting an audit. And I was like, yeah, this is a great prep webinar. Sorry, and we are definitely going well over the hour. Um, I think
Thank
the
you.
rest I can probably uh, during a thematic internal, what typically is inspected during a thematic internal controls inspection? That probably is a whole nother webinar. Would you agree?
I can give you a quick answer.
Okay.
The essentially in a thematic review, they're going to be assessing compliance against the internal controls rule and statement of guidance. So they'll be looking for evidence that you're complying with that. Do you have the things in place to ensure that you comply with that? They might ask for evidence of to demonstrate how you do that. The exact scope of it in comparison to a prudential inspection, I don't know, but I would assume it would be very much driven from the internal controls rule, in asking you to demonstrate that you're complying with that.
Okay. All right. Thank you. Thank you for that. I had to dig
Just,
deeper
just,
into that one.
just last from me, I think you asked a question earlier about whether the outsourced MLRO could approve a high-risk customer. So be part of that process, and they can make recommendations, but the ultimate responsibility lies with senior management or the board to approve
Of
risk
Okay.
relationship.
Okay. Of the regular. Okay. So that's good to know. So, yeah. So just to repeat, one question I had asked was, could an outsourced MLRO approve a high risk relationship for their client? And you are saying that you've got confirmation that it really needs to be the regulated entity, somebody on the board.
It needs to be senior management from the regulated entity. So if the regulated entity is onboarding a customer and the outsourced MLROs and the customer risk assessment has identified that should be high risk, it's senior management of the financial service provider.
Okay.
So that should approve that. The responsibility lies with the senior management. Yeah.
Okay, great. Thank you for clarifying that. All right, I think we have, like I said, there are so many other questions. I will read through them and try to answer directly those of you that I can. So again, thank you for everybody for staying on. We still have almost, a lot of people did stay on. So this was very, very good, Scott. I want to thank you for your time. And thank you for the audience members for your very good questions. I mean, this is just fantastic questions, I think. And it also just kind of goes to show that, this is just one aspect of AML compliance. There was one question in there that I'm still trying to find. There were just so many I'm trying to dig down, but I thought, oh, that was really good. It just kind of shows that how nuanced all this can be. But I will try and go through these and answer everybody via email. And again, this is our last webinar of the year. Gosh, we had so many. And I want to thank you again. Tom has done a fantastic job of lining up our calendar for 2026. So we will still be doing it. We'll probably only do one a month going in 2026. I was trying to do two a month in 2025, and it got to be a bit heavy for me. So we will only do one a month. But that, again, we'll cover some good topics. And there was like money laundering trends, some new trends coming up. Again, I also have, a published author. He wrote a book called I think it was How to Launder Money or something like that. So, but obviously he's done it from a investigative standpoint. That'll be very good as well. And if you have any ideas or topics that you would like us to discuss, please email, Thomas Gardner. He's the one who is, his email is here. He goes out and hunts down the guests for us to hear from them. And again, Scott, thank you. Again, these are not easy. This is not just an hour of your time. This is hours, if not days, putting together slides, doing the research, and getting everything. And I could tell from the audience members, I don't know if you can see all the thumbs ups and thank yous, but they're coming in. And again, and I hope you and your family enjoy Christmas in the Cayman Islands. And for anybody who is traveling, please travel safely and just have a wonderful, happy holidays and a happy new year. And I will see you all again in 2026. Thank you very much for joining us.
Thanks, Kimberly. Thanks, everyone.